I posted something on Instagram recently which upset a lot of people. Here's what it said. Historically, if a 21-year-old invested $100 a month into the S&P 500 until they were 65, they'd retire a millionaire. What are you doing with your money? Now, when I posted this, I didn't expect it to be a controversial post, but the reason why so many people were upset by this post particularly was because, well, why would you want to wait until you're 65 to become a millionaire? That takes so long. Or like one person said, if you can't show me how to become a millionaire by age 40, then there's no point. And this right here, I understand the internet is the internet. You got a lot of interesting people on the internet, but the reality is this mindset is the reason why so many Americans will never, ever become wealthy. And the reason isn't because we don't have access to the right tools. The reason isn't because we're not making enough money. The reason isn't because of something going on in society. The reason is because we are our own roadblocks to becoming wealthy, and that roadblock is our mindset. See, becoming wealthy takes time. There's no ifs, ands, or buts around it. Anything worth having takes effort and it takes time. One of those things is becoming wealthy. Now, I get it. Everybody wants to become rich quick. Who doesn't want to become a millionaire in their 20s or in their 30s? But the reality is, if you want to become wealthy, you're going to have to put in the effort, you're going to have to put in the time, and you're going to have to put in the sacrifice. And time is going to go whether or not you like it. And today, in today's economy, we have a lot of people in their 40s, in their 50s, and their 60s that are pretty much dead broke with no money put aside for retirement. Why? Because they thought the same thing. Why would I want to put a little bit of money aside so I can become a millionaire in my 60s? And then you become your 60s and you have nothing put aside. Let me tell you something. $1 million in your 60s is more than $200,000 in your 60s. So yeah, it's better for you to have $1 million than $200,000. So this is where you're going to have to make a decision about what type of life that you want to live. Let me actually read you a line from this Yahoo Finance article. The title of this article is How Many Americans Have $100,000 Saved for Retirement? And if you scroll down to where the title is Most Retirees Will Depend on Social Security, it says 64% of Americans over the age of 65 have $100,000 or less saved for retirement. Here's the thing. The average person, the majority of Americans have nowhere near how much money they need in order to be able to retire. And so if you have that mindset today, oh, I'd rather be rich today, enjoy my life today, and be broke tomorrow, well, eventually tomorrow's going to come. And then you're going to have to find a way to pay your bills. And then unless you have rich kids who can take care of you, you're going to be struggling to survive relying on Social Security. Because let me tell you something, our economy today isn't our parents' or our grandparents' economy where you were going to get a pension from your company and then Social Security and then have your savings. We don't have that anymore. Pensions are a thing of the past. So if you're under the age of 45, good luck getting a pension. Social Security is not keeping up with the cost of living. And for anybody who says, oh, but Social Security gets a raise every year because of inflation, try relying on Social Security and then tell me if it's really keeping up with the cost of living. Social Security will never keep up with the increasing cost of living because the government has to print the money essentially to continue funding Social Security, and anytime you print more money, that creates more inflation. So it's a game where you're never going to be able to fund that dream lifestyle with Social Security, which then leaves you being able to fund your own retirement. And if you're not willing to put in that sacrifice today because you want to YOLO and live your life right now, well, eventually that day's going to come where you get a little bit older, and then you're going to have to make that decision of what do you do in order to survive. And that might mean that you got to take a second job when you're 68 and have to now go to the evenings to go to the Walmart and start greeting people when they come in. That way you have money to keep feeding yourself and your spouse. And this now is where you got to understand, what will it take for you to become wealthy? There's nothing wrong with wanting to become wealthy. There's nothing wrong with wanting to become wealthy young. That's fine, but you have to understand what it takes to actually get there. In order to become a millionaire, you're going to have to put money aside and then let this money grow, period. If you want to become a millionaire sooner, you're going to have to put more money aside and let it grow more aggressively. How do you do that? Well, you can spend less money, meaning make more sacrifices today, or you can work to earn more money. And this is where you're just going to have to make that decision. I mean, becoming wealthy is really not rocket science. It's you spend less than what you make and you invest the difference. The more money you invest, the wealthier you will become. How can you invest more money? You can spend less or you can earn more. Now, there's a lot of debates on the internet about things like Starbucks. Should you go out and spend $5 on that Starbucks drink or no? Is that going to prevent you from becoming wealthy? That $5 is not going to make or break your wealth. It's not going to make a difference in how wealthy you become, but it's the mindset of where you are in your life today. And you got to decide where on the polar extreme you want to go when it comes to becoming wealthy. When I was getting started on my financial education journey, well, let's go back a little bit. When I was first starting to make money when I was in high school, because I was hosting teen parties and working at weddings when I was in high school, I started to make a little bit of money. I knew nothing about money. So what did I do? I took my money and I put it in my watches and I put it in my car. I put tints, HID lights. I put on a new subwoofer or 2 subwoofers in my trunk. I put in a new sound system. I mean, I completely redid my Toyota, but I had a nice car. Now, I knew nothing about building wealth. I didn't know what investing was. I just thought that this was what you do with your money. You make money and you buy some nice things. And that was when I started reading books. I read Rich Dad, Poor Dad by Robert Kiyosaki, and I read Total Money Makeover by Dave Ramsey. And these 2 books completely changed the way that I looked at money, because now all of a sudden I realized I could use my money as a tool to make me wealthier. And when I was spending my money on my car, I was making everybody else wealthier. So I started changing what I did. And so I went from the polar extreme of spending every dollar that I earned to now not wanting to spend a penny. And when I say I went to the other polar extreme, I mean I went to the polar extreme. I'm a weirdo, so I do things all out. When I go and commit to something, I go all into it. That's just my personality. So what I did was now I worked to earn money and I spent nothing. And I mean nothing, unless I really needed it to survive. And this is where you got to understand the real definition of a need versus a want, because I would go to restaurants with my friends. I'd only order water. That way I didn't have to pay for food. I would have shoes with holes in them where the sole would separate from the top of the shoe. So when you walk with the shoe, it'd be flapping like this. And I would take masking tape, tie it up together. That way I didn't have to buy a new pair of shoes. And when I was doing that, I was also buying rental properties. So I had real estate investment properties, but I didn't have shoes without holes in them. I continued to live like this for a long time. When I was in law school, I was making over $100,000 a year from the other ventures that I was doing. But I was so focused on just buying assets, particularly rental properties, that I spent as little money as possible. I was living in an apartment where I was paying about $400 a month, and that was the total cost, including all utilities, gas, electricity, internet, water, and parking. And the reason why I was able to get this apartment so cheap was because I didn't even have a room. I was sleeping on the living room floor. I had a mattress that I pulled out of the hallway. When it was time for me to sleep, I used to lay it down in the living room, put on some sheets on top of it, go to sleep at night, wake up, fold the sheets, put the mattress back up, put it back in the hallway, and then go to work and go do my thing, go to school, and then come back and do it again the next day. I did not want to spend any money unless it was putting money in my pocket. I even made a rule that I refused to go travel. I refused to go on vacations unless I was getting paid to go on vacations. And the way that I was getting paid to go on vacations was because I was working in the wedding industry. I used to play a drum called the Dol. It's a Punjabi Indian drum. And sometimes I was lucky enough to get invited to go play at a destination wedding, which means I was getting paid to go and travel to go play this drum at somebody else's wedding. That was how crazy I went. So I went from one polar extreme to the complete opposite polar extreme, where I went from spending everything to now spending nothing, because now my goal was just to buy assets as soon as possible, because I understood that one thing: the more assets I own, the wealthier I will become. How can I own more assets? I can either spend less or earn more. So I was working to spend less money and earn more money so I could do one thing: just buy rental properties. That was what the game was for me. You don't have to buy rental properties. It could be rental properties. It could be stocks. It could be your own business. There's a lot of different things that you could do. But that was the game for me. I only wanted to get these rental properties because I wanted to build that financial freedom for me. Now you might be thinking, but Jaspreet, there's more to life than just money. There's more to life. You got to make memories. You got to enjoy. Yeah, you do. There's more to life than money. I never said that money is the only part of life. Money is just one piece of our life. You've heard me say this at least, 100 times now. There's 4 parts to living a fulfilled life. You got to be physically healthy. You got to be mentally healthy. You got to be spiritually healthy. And then you have to be financially healthy. If you want to live a happy and a fulfilled life, I call this my quadruped triangle. Physically healthy means you got to take care of your physical health. This is the only body that you get. If you are on your deathbed, if you're morbidly obese, more money doesn't make any difference, because all you want to do is be healthy again. If you are not mentally healthy, if you're surrounded by toxic people, if you're not in a good environment mentally, if you're surrounded by people that are constantly bringing you down and you're miserable, you're depressed, you're anxious, more money is not going to fix those problems. And if you think that more money is going to find you love, more money is going to make you better friends, more money is going to find you more happiness in that mental aspect, you are living a big lie, and then you are in for a big surprise. And I've seen this happen where people think that once I become a millionaire, I'm going to find the love of my life and I'm going to attract this type of girl. I'm going to have these types of things just because I have money. It doesn't work like that. Spiritually fit does not necessarily mean religious. This means, what is your purpose? What's your reason for getting out of bed every single day? There's a great book by Tony Hsieh, who was one of the co-founders of Zappos. Unfortunately, he passed away. But when he wrote this book, one of the things that he talked about was that he sold one of his businesses. It had millions and millions of dollars. He had an amazing penthouse. He had everything materially that he wanted. But he was so miserable because he had no sense of purpose in his life. And this is where you have to find, what is your reason for getting out of bed every single morning? And it's not just to chase money, because eventually you're going to get that money and then you're going to realize that money is not that motivator. Money is not that purpose. You got to figure out, what is it that you are on this earth for? That's going to get you getting up and moving and doing things and excited even when you get that money. And then that's where being financially fit gives you the most benefit. It gives you the most power, because now when you get that money, you can do more things that make you happy. And the flip side to this that you should also understand, if you don't have money, well, then money can then also take away your spiritual fitness, because now when you don't have money, you can really lose your sense of purpose because you're always struggling to pay the bills. When you don't have money, it can really ruin your mental fitness, because when you don't have money, you can be stressed. It can cause issues in your marriage. It can cause issues with your family. It can stop you from wanting to do the things that you want. It can make you really feel miserable. And if you don't have money, it can also hurt your physical fitness, because now you might not be able to get the right gym, the healthy food, the right things to take care of your health, or the right medical coverage. And you can hate this, you can love it. It does not matter. The reality is, in America today, money can buy you better health care, period. I have seen this firsthand with my own family members, where you try to go through the system, you try to go through the insurances. Some insurances are okay, some of them are not so good. When you try to go through that system, you could be tied up waiting for average, okay, mediocre medical care. Now, throughout the world, yeah, it's much better than other places in the world, but you're going to get decent medical care when you go through insurance, and sometimes you might not get the best medical care. But if you have more money and you can bypass the system, because now you can pay for services through cash, yes, it costs way more money. Now you can get access to the top doctors, the top treatments that many times are not even covered through insurance. What allows you to do that? Money. This is where you have to understand how money plays a part in your life, and you cannot keep creating these smoke screens. And you also have to understand that money, getting money, attracting money, accumulating money, keeping that money is a lifestyle. It's not something you just do once and then say, you know what, I'm going to do this, this, and this, and I'm going to be a millionaire, and then I don't got to do anything after that. That's not how it works. Building wealth is a lifestyle. It's just like becoming healthy, physically healthy. Becoming healthy isn't something you do for 6 months. The people that go on diets for 6 months are the same people that end up fat and eating donuts and ho-hos 12 months later. Because when you go on the diet, you go on the short-term thing. Yeah, you can lose some weight very, very quickly. But then when the diet finishes, you're going to go back to the same lifestyles that got you into the bad physical shape in the first place. But the people that live healthy lifestyles, where you work to eat healthy, sure, maybe you eat desserts once in a while. Sure, maybe you eat unhealthy once in a while, but you're eating healthy, you're exercising regularly. That is a lifestyle. And when you live that lifestyle, you don't have the same cravings and the wants to constantly eat the junk food, because you have that healthy lifestyle. When you live a physically and financially fit lifestyle, now the financially fit lifestyle, you don't want to blow all your money, because you want to own the assets. You want to let your assets pay for your lifestyle. You want to live in a way where you can support your lifestyle and not have to worry about the debt payments. That becomes a new normal. And thinking about now going into debt to buy things that aren't going to pay you creates stress, and you don't want to get into that stress, so you avoid all of those stresses. And this is where now it goes back to, if you want to become wealthy, you got to put in the sacrifice. It's going to take time. And the time part, this one is difficult, because the internet particularly really changes the perception of time. And I can tell you this as somebody who became fortunately successful when I was younger, through a lot of sacrifice. I was in my 20s and I was making pretty decent money. And even though I was successful. Like I started making over $1 million a year when I was in my 20s. I was successful in my 20s, but I would still go onto Instagram and see people driving these fancy cars who are younger than me, seeing people have these crazy lifestyles on Instagram, and it would still stress me out because I would say, what are they doing that I'm not doing? What am I missing out? Now, on one hand, I'm doing great by pretty much any measure possible financially. But yet I'm looking here on Instagram, seeing what people are doing, and I'm still getting this anxiety, like what are people doing? Now, what I didn't realize at first was that a lot of things that you see on Instagram are just poo-poo, but this is where you have to be able to create that barrier for you. When I first got on the internet with social media and minority mindset and that, I got pretty obsessed and I spent a lot of time on Instagram and social media and more than I should have. And I became kind of, I don't want to say addicted, but I came very stuck on social media. And I realized that this was a very toxic trait for me. I realized mentally that was not good for me. So that was when I told my team, I said, look, I don't want to touch my social media anymore. I'm getting off of social media. So I pretty much took off all social media off of my phone, and then I didn't go on Instagram or social media for probably 2 years because I needed to get away from social media. I needed to break away from all of that stuff that was being on the internet because there's a lot of crap out there. And I'm not just talking about what people post on social media. It's the same thing with all these programs of how you can get rich in 6 months. You can live this laptop lifestyle and not have to work and make all this money. That's not how business works. Business takes time, it takes effort, and it takes sacrifice. And just because your business makes $1 million does not mean that you make $1 million. Just because your business makes $1 million does not mean that you should be driving out in these $500,000 cars. It doesn't work like that because as I started to grow, I started to learn way more that, oh yeah, okay, when you make $1 million in your business, if you take the money out and you go out and buy a Lamborghini, your business is really just dying when you do that because your cash flow is the lifeblood of your business. So now when you pull out this cash to go out and buy something like a Lamborghini or a fancy car or a vacation, all these things are liabilities. Now, sure, if you can afford it, fine, but if you're in the growing phase of your business and you're pulling the cash out of your business so you can live this lifestyle, well, how are you going to grow the business? And that's why you start to see a lot of these kind of fleeting influencers. You'll see these people come on the internet, they'll show off these nice things, and then 9 months later, they disappear off of the face of the earth. It's because they went out and they financed a lot of things, and then they realized the cost of managing this lifestyle. And it's very difficult. And so this is where now, if you want to have the nice things, there's nothing wrong with that. But you got to follow the formula. And the formula is spend less than what you make, work to earn more money, and invest the difference. That's what's going to allow you to live a sustainable, wealthy life. Because now when you own the investments, when you own the assets that are paying for your lifestyle, when you have the assets that are paying for your Lamborghini, when you have the assets that are paying for you to go on the nice vacations, when you have the assets that are paying for you to live that life, well, now, yeah, go out and buy whatever you want because those assets will continue to pay you even when you're not going to work. And that is the real key to becoming wealthy versus just looking like you're wealthy. It's easy to look like you're rich in America. We have easy access to debt anywhere you go. You can go and get 0% APR. You can go and get buy now, pay later. You can go and get credit cards with easy, low credit financing. It's very easy to go out and buy things, to look like you made it. It's easy to look like you have all the nice stuff. But if you really want to afford and live that lifestyle without having to worry about the money, that's a completely different game. And that means you're going to have to make yourself rich first. And the way that you do that is by making those sacrifices. And it takes, I keep going back to the time aspect. It does not happen overnight. You hear about the people that become quote unquote overnight successes. Well, it took years for them to get there. You can look at how many years it took me to build my YouTube channel to where it is today. My first video was published in 2015. I started consistently making videos in March of 2016. Year after year after year after year after year of constantly putting out videos before I was able to build a YouTube channel where I am today. And before YouTube, well, I was doing a lot of things to figure out the game, to start building my assets, to start making that money, to start doing the things that can give me more financial freedom. that was years in the making before I even touched the internet, before I even touched YouTube. I had to go and learn about how to sell things online with e-commerce, started multiple different e-commerce companies. I sold on Amazon. I was a real estate salesperson, and when I was a real estate salesperson, I wanted to learn how I could make more money in real estate, so I spent a lot of money learning how to become a real estate wholesaler. So then I spent time being a real estate wholesaler, and before I was a real estate wholesaler, I wanted to figure out how I could just attract money because, well, I was investing in real estate, but I needed money to invest in real estate, which meant I had to go out and earn that money. And the way that I was doing that then was I was running an event planning company. And I did that for a number of years. And the reason why I started an event planning company was because I started playing that drum, the dole that I was telling you about at Indian weddings. So it was not a linear journey, but it was a lot of different things that I had to go through in order to learn the skills, because I had to learn how to talk to people. I had to learn how to sell things. Even though I'm not a very good salesperson, I do not consider myself a great salesperson. I had to learn how to sell things. I had to learn how to talk. I had to learn how to market. I had to learn how to get people to like my products. I had to learn how to be skillful and be creative to get people to learn about the businesses and products that I have. Those things take time. And if you want to be able to earn more money, so you have more money to invest, you have to be willing to try things. Everybody wants to become a millionaire in 6 months or in a year or 5 years, but you're going to have to put in the work in order to get there. And that work means, again, now you're going to have to work to earn more money, because that's the game, right? You need to put money aside in order to become wealthy. How do you do that? You spend less or you earn more. There's a limit to how much less you can spend. Yeah, you could be a weirdo and really spend less like I did, or you can be a little bit more normal and spend less than what you make. So you work to spend less money, and you got to figure out how much less you spend. But then you can also work to earn more money. And there are an unlimited number of ways that you can work to earn more money right now. The internet has made this more accessible than ever. If you want to make money on the internet, it ultimately comes down to grabbing somebody's attention. We live in the attention age where the internet, the computer, the phone has grabbed people's attentions away from the TV. Now on the internet, how do you get your viewers or your listeners or your subscribers' attention? And this is now through your content. How can you create content that grabs people's attentions? And now you might be saying, oh, I don't want to be an influencer. Look, it doesn't really matter what you want or don't want to do. The reality is, this is how the game works on the internet. If you want to make money and you want to be able to generate leads, generate sales, generate revenue from the internet, you have to be able to capture somebody's attention. Now, does this mean that you personally have to be the one creating content? No, not necessarily. You can write a blog, you can put out other types of content where it's not necessarily your face. However, you have to be able to capture somebody's attention by giving them something that they want, something of value. This could be entertainment, this could be education, this could be a whole bunch of different things where now you're creating something that people want to watch. And then the next thing is, how can you be different than everybody else? Because guess what? Now, the internet has made putting content out there so much more accessible. There's a lot of people putting content on the internet. And if you are just copying what somebody else does, you're no different than somebody else. And this is where people will have to make a decision. Why would they want to watch you if they can watch somebody else doing the exact same thing? And this is where now you have to be different. And you have to be willing to put out your content in a way that appeals to a particular person. Now, the interesting thing about this is you are unique yourself. There's nobody like you. You are the only you in the world. So if you want to be able to capture somebody's attention, all you really need to do is be you, be yourself. And if you are yourself, now you can capture somebody's attention, because guess what? There's other people that will like your personality. There's other people that will like the way you talk, whether it's weird or not weird. Some people will like it. And this is where now you just have to be able to capture somebody's attention. And when you can do that, that's when you can offer your services, offer your products, offer other people's products, generate advertising dollars. There's a lot of different ways that you can make money, but it all starts with grabbing somebody's attention. And again, you got to be willing to start. The reason why so many people will never achieve it is because most people are not willing to start or do something because, number one, it's hard, it's risky. Number two, you don't want to look like an idiot or a stupid person or a failure in front of your friends. And number three, you might feel like you're so committed into your own space that you're in right now that you don't want to pivot. And right now, though, if you want to be able to earn more money so you have more money to invest so you can become wealthier sooner, you're going to have to start doing something. Does it have to be on the internet? No, but the internet can allow you to scale whatever it is that you're doing, but you have to be willing to try something. because the first thing you do is probably not going to be the last thing that you do. And so you have to get started with something. That way you can start learning. And you have to understand that you're probably going to make mistakes. You're probably going to screw up. You're probably going to lose money at some point. That's a part of the process. There's no successful entrepreneur, there's no successful person in the world that did not make mistakes or lose money. But the fastest way for you to get there and get to the point where you want to go financially is you just got to get started. And the thing then that so many people do is they want to come up with the perfect idea, the perfect business idea, the perfect pitch, the perfect product. But when you spend all of your time trying to perfect the product, you're actually taking steps backwards because you don't know what your audience or your customers are going to like. The best way for you to learn is just by putting it out there and letting people try it, telling you why the product sucks. That way you can then fix the product. When you try to fix the product, it's going to cost you way more time, but it's also going to cost you way more money trying to put it all together. And then when you go out to launch it, it's still going to suck. And that's where let it suck earlier. That way you can make the mistakes and learn. That way you can make your money faster. Like right now, I run a company called Briefs Media. You've probably heard me talk about Market Briefs, my free financial newsletter. Well, that's one of the newsletters that we have in Briefs Media. And one of the core values that we have for our team is fail fast and learn quickly. And the whole idea behind that is it's okay to make mistakes. Mistakes are okay. We just don't want to keep making that same mistake multiple times. It's okay to make mistakes, but you need to learn quickly from those mistakes. That way you can fail fast and learn quickly. Now, if you have not joined Market Briefs yet, it's the free newsletter where every day my team is breaking down what's happening in the top finance and business news. We break down what's happening in things like the housing market, the stock market, the crypto market, the global economy, and our own economy into a fun, witty, and easy to read email. You can read it in less than 5 minutes every morning, and it's completely free. So if you want to read Market Briefs, you can go to briefs.co/market. That's briefs.co/market. And I also got the link for you down in the description below. But I think one of the reasons why it's so difficult for so many people to actually go out and take the actions to become wealthy is because, well, we're never taught about how to build wealth. And the first thing that I think schools should teach people is how do you get wealthy in our economic system? Because we live in what's called a capitalist system. But most people really have no idea what that means. It just becomes a politically charged term. I was at the San Diego Farmers Market last weekend, and just to the side of the farmers market, there was a couple of people that put up this table advocating and teaching people about socialism. Now, I was looking at this table and they came up to me and asked me if I'm interested in socialism. Now, I like talking to people with differing beliefs because I always like to learn from people with different beliefs. I think you should always learn from people that disagree with one another because that's how you learn. Real intelligence comes from learning from people with differing beliefs, not just solidifying one belief by calling everybody else stupid. But when they came up to me and asked me if I wanted to learn more about socialism, I said, I'm not too interested, but I'm happy to learn more. So he starts telling me a little bit about how socialism works and how socialism can end world hunger and how socialism can help so many more people because you don't have people that are greedy, stealing profits, stealing money from everyday people. And I said, okay, that's interesting. And that was when he proceeded to try to sell me this book or pamphlet about socialism. Now, I thought that was very interesting. And I asked him, isn't that kind of capitalist of you to try to sell me this book on socialism? And I didn't try to say it in a mean way because I'm just trying to learn from what people are doing. And what he said was, we don't want to go out and raise money from for-profit capitalist organizations. So we want to raise money from regular people. That way we can continue to fund our operations. And I said, well, I run a for-profit company. Would you still take money from me? And he said, yes, of course we would still take money from you because, you're not one of those capitalist organizations. And to me, that just was an interesting remark. And I said, I think it's kind of capitalist of your organization to want to sell your products to take money. That way you can continue to fund your ideas and operations. And that was when the person trying to sell me this book, I think, realized that I wasn't going to buy his stuff. And he kind of just separated from me at that point. But I think this is where it's important to understand what a capitalist system is, because here in the United States, we live in a capitalist system, a capitalist economy, which means if you work a job, you are working a job in a capitalist economy. If you're running a business, you're running a business in a capitalist economy. Now, in today's economy or today's political environment, the word capitalism has really gained a lot of political ammo. But what I think is important for people is if you're working to earn money in a capitalist system, you might as well understand how a capitalist economy works. That way you can understand how you can build wealth in a capitalist economy, because the people that become wealthy in a capitalist economy understand what capitalism means. And the reason why I'm so passionate about this topic was because I didn't even know what the word capitalism was until I was like in law school. Like I had never really understood that term. I heard people talk about it when I was in college, but I never really understood that term. Nobody ever taught me this thing until I went out of my way and started learning about it. I was investing in real estate. I didn't know what capitalism was. I was going out and building businesses. I didn't know what capitalism was. I just heard people politically saying capitalism is good or capitalism is bad. I knew it had something to do with businesses making profits, but that's all I really understood. But truly, in a capitalist system, what that means is you can make money from your labor, or you can make money from your profits, from what you own, your equity. That's what a capitalist system means. And so now when you go to school and you get a good degree and you get a good job, you are making money from your labor. You're going to work in an entity, in a business, and you are getting a salary. That's how you get paid with your labor. But in that company, you're going to have some people that own the company. That might not be the CEO of the company. That might not be your boss. But there are other people that own the company who might not work in the company. And the people that own the company that you work in, they don't get paid a salary. They get paid with profits. And that's what a capitalist system is, where some people earn for their labor and some people earn for their equity. And this is where now it is so important to understand this, because the wealthiest people in this country and the world are earning money not from their labor, but from their profits. They're earning from their equity. They're earning from their assets. Because now, when you own the asset, when you own the business where people are working to generate money, they're working to generate profits, you can continue to get paid even when you are not working, and there's no limit to how many assets that you can own. And so it's much more scalable versus there's a limit to how many hours you can work in a company. There's a limit to how many days you can work. There's a limit to how much effort you can put in. So there's a limit to how much money you can earn from your salary, but there's no limit to how many assets you can own. There's no limit to how much profit you can generate. Plus, when you own the asset, there can be hundreds or thousands or tens of thousands of people working to drive up the profits, versus when you're just relying on your labor, there's only one you that's working to generate the income for you. This is why investing your money is so important, because when you invest your money, you are diversifying your money away from you. Because when you just have your salary, when you just have your income that's funding your lifestyle, you're one paycheck away from being broke, or one decision away from being broke if you have a big savings account. Because if your company goes bankrupt because the CEO drives the company into the ground, or if you break your leg and you can't go into work, or for whatever reason you lose your job, you no longer have that income. And now you no longer have the money coming in to support your lifestyle, which means if you have a lot of expenses and no savings, now you can be stuck in a very tough financial situation, versus when you own the assets. Those assets can continue paying you even when you're not working. But the way that you can get these assets is not by being born into a rich family, although that can help. It's not by marrying rich, although that can help. It's not by having millions of dollars, although that can help. It's by taking a piece of the money that you're earning and using that to own other assets. And you don't need a ton of money to start. I mean, you can start with as little as $100, and you can start investing in other assets. What are these assets? You can invest in stocks, you can invest in real estate, you can invest in other businesses. There's a lot of different ways that you can do this, but the key is that you have to get started investing in these assets. That way you can win in this economic system. And the reason why so many people hate the economic system is because most of us are never taught how this system works. We're taught to go to school, to get a degree, to get a job, and then wonder why everybody else is rich. Because if other people are rich and you're busting your butt, you're going to wonder, why can't I have that financial freedom too? I'm going to work 6 days a week. I'm putting in all these hours. I'm making financial sacrifices. And then I see other people working less than me that have way more than I do. It doesn't make sense. And this is that basic level of financial education that we're never taught. Wealthy people are working not for a bigger salary, but for more assets. But the average person who goes through the system is working to just get that bigger salary so we can have the nicer things. And you get caught up in that rat race where you're just working to earn more money to drive the faster car. You work to earn more money to have the bigger home. You work to earn more money to have a couple more vacations. And you just keep spinning your wheels in the cycle, but you never have any ability to stop spinning your wheels. You never have the ability to take a break because you have all these consistent, reoccurring expenses, and you need to keep funding this lifestyle, which means you're going to just have to keep working forever in the system. And then hopefully, eventually, you'll have enough money put away in your 401k to be able to retire. But if you really want to become wealthy, you're going to have to be more aggressive with how and where you invest this money. That means instead of using your raise to finance a newer car, using the raise to invest a little bit more aggressively so you can own more assets. And now if you want to do it even more aggressively, you're going to have to work to earn more money. Maybe that means getting a second job. Maybe that means working to create your own business. Maybe that means creating a side hustle. Getting more income, not so you can have more things, but so you can own more assets. That is the way that you win in this economic system, period. And this is where now, if you understand this, it's going to change the way that you think, because you have to understand how this system works. See, the shareholders, the owners of a company, they're the ones that make the shots. And the executives, your boss, the CEOs, the C-level executives, they're the ones that are trying to please their boss. Who is their boss? Because yes, your CEO has a boss. Their boss is the shareholder. So the CEOs and the C-level executives have a duty not to please their employees. It's not to please their customers. It's to please the shareholders. How do you do that? By making the company more valuable, by increasing the profits, by increasing the market valuation of the company. How do you do that? Well, you got to get more customers. You got to make the customers happy, and you got to make sure the employees are producing good products for the customers. So this is where now, when you understand the system, you will realize that as an employee, you get your labor. And unless you get equity, you don't own the company, which is where now you need to own the company. In America, every single person needs to be a business owner. But that does not mean that everybody should be a business operator. That does not mean that everybody should start a business. And that does not mean that everybody should manage a business. In fact, most people should not. So how do you own the business without operating it, starting it, or managing it? By going out and investing in other businesses, by being a shareholder, by being the investor, by owning the equity in other assets, whether it's stocks, whether it's real estate, whether it's startups. You need to go out and invest in these assets that are working to produce more value. That way your income and your wealth isn't just reliant on your skill set, because your skill set is fleeting, but there's no limit to how many assets and how much you can make and how much wealth you can build from these assets. Now, once you start investing your money, the next thing that you need to understand is that your investments will not always go up. In fact, in our economic system, we see booms and busts. Pretty much every decade for the last century has seen some sort of recession or market crash. Why does that happen? Because people start investing their money into an asset class. This asset class becomes overvalued. It becomes overheated. And then eventually people realize, oh, this asset is worth way more than what it's actually worth, causing some people to sell. Then when it starts to sell, you see this asset class start to fall. As this asset class starts to fall, people start to panic and to sell even more, and then it gets oversold. That's what creates these booms and bust cycles. And then you have the media, which perpetuates the top and the bottom. The traditional media, who says that nothing bad can ever go wrong when things are going up, that the market is great and everything will continue to be like this, getting more people excited to put more money into the markets. And then when things are going wrong, the traditional media will tell you about how the world is ending and how you need to get out while you still can. A new report just came out which said that our GDP, our economy here in the United States, actually grew by 2% instead of the 1.3% that was originally reported, which means that our economy wasn't slowing down as fast as a lot of people thought, which has a lot of people wondering, is the recession canceled? Are we still going to see a recession? Are we still on pace to see an economic slowdown ahead? Is inflation really affecting us? Are the higher interest rates really affecting us? And this is where I want you to pay attention to a couple different things. Number one is what's happening in the economy and what is the delayed effect of the higher interest rates? Because if you look at the economy right now, how did we get into the situation that we're in right now, where we still have high inflation, where people are still struggling to pay for a lot of different things, yet the prices of things are still rising? Well, in 2020 and 2021, we saw the most amount of money printing ever. According to the NASDAQ, it was close to $13 trillion of new money that was created, that was injected into our economy, which is a lot of money. So you had all this money created and injected into our economy, which means now all of a sudden, people have the ability to spend. Businesses have the ability to spend. Businesses have the ability to hire more people. Businesses have the ability to expand operations. Businesses have the ability to open new offices. People have the ability to buy more stuff. People have the ability to finance more things. People have the ability to apply for more loans, which created a whole flood of new money entering our economy. Today, the Federal Reserve Bank is trying to cool down the inflation. Inflation is when you decrease the value of the dollar by printing more money. We had so much more money created that the value of our dollar dropped, which is why the prices of things have risen so quickly. Now the prices of things have risen so fast that the Federal Reserve Bank is trying to cool down this high inflation. They're trying to cool down the speed at which prices of things are rising. How are they doing that? By raising interest rates. But you have to remember, they're raising interest rates to combat all the money creation that happened in 2020 and 2021. And I don't think anybody really realizes the full impact of all that money printing, which means it's going to take time and effort and even economic pain to get this excess money out of our economic system. Because people today still have the ability to spend. Is it easy? No, we are seeing credit card debt levels break new record highs. We're seeing people dig into their savings, but people still have the ability to spend. Why? Because we saw incomes grow, we saw new jobs be created, which also means that people have more credit worthiness. In our economic system, there's two kinds of money. You have the money that you work to earn, and then you have your credit that you qualify for. Because in this economic system, we live in a credit-based economy, which means people spend not based off of how much cash they have in their bank account, but based off of how much credit they can qualify for. So now if you have $100 in your bank account and your bank is willing to extend you $100 worth of loans, credit cards, or debt, you can have $200 worth of spending power. So over the last couple of years, not only did spending power increase because of more money, but then also credit worthiness skyrocketed because we had low interest rates and higher incomes and more incomes because more people had jobs, which means credit worthiness also boomed, which created more ability for businesses and people to spend. Now, what we're seeing happen today is more and more people are going into debt to continue funding their lifestyles. There's going to be a limit to how much debt people can ultimately rack up, especially considering now that interest rates are significantly higher than before, and the Federal Reserve Bank keeps signaling that they're going to keep working to raise interest rates. So if interest rates keep rising, while debt levels keep rising, you're eventually going to hit a point where people will not be able to continue spending. Now, when will that be? You have a lot of different projections and opinions. Deutsche Bank says that it's going to be towards the end of 2023, around October 2023, when this excess money is going to start dwindling away. And when you start to see that excess money start dwindling away, it's going to be harder for people and businesses to continue spending the way that they were before. When that happens, you would expect spending to start slowing down. If spending starts to slow down, that could cause more economic pain and a cool down in the economy because businesses don't have the same revenues to support the higher expenses. Why are businesses seeing higher expenses? Well, for number one, you have all the inflation that we've seen happen. So now businesses have to pay more money in salaries, they have to pay more money in their rents, they have to pay more money for all their costs. And then you also have the rising debt servicing costs because in 2020 and 2021, businesses loaded up on debt because it was so cheap. But business debt is not a 30-year fixed rate mortgage. Many times it is an adjustable rate mortgage that readjusts every 3, 4, 5, 6, or 7 years. And so now what we're seeing happen is that in the next coming 18 to 24 months, we're going to see a lot of this business debt readjust at the higher interest rates. And interest rates today are significantly higher than where they were back in 2020 and 2021, which means we could see the costs of servicing these debts skyrocket for businesses at a time where spending is also declining. So when people talk about, are we going to see a recession or not? Recessions happen. It's a part of our economic system. It's not a matter of are we going to see a recession or not. The question is really, how bad is it going to be? Because if we're still seeing high inflation when we go into this recession, the Federal Reserve Bank is going to have a more difficult time stimulating our way out of this recession, because if you look back to 2020, 2008, 2001, every time we had these recessions in the past, the Federal Reserve Bank could inflate and stimulate our way out of the recession. They could print money, do quantitative easing, we could send out stimulus checks, we could do a lot of things to stimulate and boost the economy. But if you're facing high inflation, that then poses a lot more issues, because before 2020, before 2008, before 2001, high inflation wasn't a concern going into the recession. Now we still have the high inflationary issues. Inflation has fallen, but it's still very high, which means if the Fed started cutting interest rates, you're going to see more spending. You're going to see a boom in the economy, but that's also going to cause prices to rise quickly again, which would push inflation higher. I mean, just think about it. If mortgage rates went down to 3% tomorrow, what's going to happen? People are going to want to buy homes. You're going to see bidding wars for homes. If you start to see more bidding wars again, home prices are going to skyrocket. If home prices go up again, your inflation numbers are going to go up again, which then means the Federal Reserve Bank would have to start raising interest rates again to then cool down this inflated housing market. That's the tough situation that we're in. Now, we've been covering all of this in Market Briefs. Market Briefs is my free financial newsletter, which is why if you have not joined Market Briefs yet, I highly recommend you do so, because it's an easy and free way for you to stay up to date on what's happening in the economy, in the housing market, in the stock market, in the crypto market, and the global economy into a fun, witty, and easy to read email. If you have not joined Market Briefs yet, you can go to briefs.co/market. That's briefs.co/market. And I also got the link for you down in the description below. But let's take a look at this article. It says the gross domestic product, GDP, our economy, increased at a 2% annualized pace for the January through March period, the first quarter, up from the previous estimate of 1.3%. And then we go down to see that the upward revision helps undercut the widespread expectations that the United States is heading towards a recession. What does this mean? The economy didn't slow down as fast as people would have liked, meaning people spent more than what was originally reported. How are people spending? Well, they're spending from their incomes. They're also spending from credit card debt, and they're also spending by going into their savings. Consumer spending rose at 4.2%. That's the highest quarterly pace since the second quarter of 2021. Why are consumers spending so much more money? Well, either people are becoming so much more richer that they have the ability to spend, or the higher inflation is forcing people to spend more money. And this is what we're seeing happen in a lot of different instances, where the high inflation is forcing people to make a decision. Do you either cut back on your lifestyle, or do you go into debt to fund your lifestyle? And what we're seeing happen statistically is more and more Americans are saying, you know what, I don't want to give up the nice restaurants and the nice vacations and the nice home that I have right now. So let me just put a little bit of it on my credit card, or just dig a little bit into my savings to continue funding this lifestyle that I have. But this next part is really interesting, so pay attention to this. An 8.7% boost in the Social Security cost of living adjustment likely boosted the consumer spending numbers, according to the senior director at Moody's Analytics. The boost in Social Security is what was a big factor in the boost in spending in America. Now, this is interesting because if you have been following what's going on with Social Security, the Social Security fund is running out of money, which means they have less money coming in than money going out. Why is that happening? Well, people are living longer, poor management of the money. Social Security is essentially the costs are higher than the revenue. So now, in order to fund this Social Security and the Social Security bonuses, because in the last couple of years, the Social Security payouts have increased pretty significantly, in order to fund the higher lifestyle adjustments for inflation, how is the government going to continue funding Social Security? Because it's not like the government wants Social Security to go down to zero. How do they continue funding it? Well, if the government has to keep funding Social Security, they can either raise their Social Security taxes, which they haven't really done, or they can print the money. So now if we start thinking about this, the higher Social Security checks, the higher Social Security payments are contributing. I mean, according to this article, that was one of the biggest contributors to the higher consumer spending. Bigger Social Security checks. Okay. The Social Security fund doesn't have the money to continue funding these bigger Social Security checks. So how do we fund that? The government has to print the money to fund bigger Social Security checks. If the government is printing more money to fund bigger social security checks, is there a cost to printing money? Well, the cost to printing money is, well, inflation. Because when you print more money, you are devaluing the currency. So the government printed or is printing more money to fund bigger social security checks, which increases spending, which increases demand. But the money printing is what's causing, or is a cause of the prices going up. So it's kind of an interesting conundrum where in order to fund the higher prices, the government has to pay out bigger social security checks, but the bigger social security checks are what's causing the higher prices. So this is where you can start to see the issues where money print, you cannot inflate your way out of an inflation problem. And the issues that we have in the economy with inflation, the higher interest rates, and the slowing economy are nowhere near from over. And that's why I keep saying 2023 is not the year for you to go out and finance a new truck. 2023 is the year for you to get financially smart, because when times are okay, you want to be preparing for when times are not okay. Now, when is that going to happen? Who knows? We don't know if we're going to start to see more pain in 2024 or 2025, but the reality is we have seen interest rates skyrocket. There's going to be a consequence to that. We are still seeing high inflation. There's going to be cost to that. We are seeing the economy slow down. And eventually, if people keep going deeper and deeper into debt to fund their lifestyles, eventually that's going to break. Eventually, people are going to have to stop. There's going to be a cost to that. And so your job now as a financially educated person isn't to be panicked and to be worried and to freak out about what's happening, but rather understand what's happening, be prepared, and be financially educated. That way you can capitalize on the opportunities. And that means right now, working to spend less money, working to earn more money so you have more money to invest, and learning about investing. Maybe start investing. That way you can start putting your money to work. That way you can capitalize on the system, because like we've been saying, when you see market crashes, when you see recessions, everybody gets angry. You can see it every time something bad happens in the markets. People get angry in the comments because they're upset at the system. They're upset at something. But these things should not be shocks. These are parts of the economic system. And the slowdowns, the recessions tend to happen when most people don't expect it to happen, which is why your job is to be financially prepared. That way you can be ready for whatever might be coming in the future, and just understand where the red flags are. And if you believe nothing bad's going to happen, that's fine, but it doesn't cost you anything to be prepared. It can cost you everything if you're not prepared, but it doesn't cost you anything to be prepared. So whether you think something bad's going to happen or not, it's better for you to be prepared. That way, number one, you can protect yourself. And then number two, you can capitalize on opportunities that might come your way. There are 3 very clear points in my life where I learned a new piece of information which completely changed the trajectory of my life financially. And I'm going to go over those 3 in this video. Number 1 was when I was 16 or 17 years old. I read the book Rich Dad Poor Dad by Robert Kiyosaki. And then I read Total Money Makeover by Dave Ramsey. And that was the first